game-changing discussions on the big ideas that shape our thinking. This is One2One.
Healthcare across Africa is changing, but one challenge remains constant: how to fund it sustainably. From hospitals struggling to stay solvent to patients unable to afford care, financing remains at the heart of a continent's healthcare crisis and its future. My guest today has spent his career navigating both sides of that equation, from banking and insurance to building one of Nigeria's most ambitious integrated healthcare investment platforms. Tosin Runsewe is the founder and CEO of AfyA Care, and previously an executive director at at.PM, where he helped redefine health and life insurance in Nigeria. Tosin Runsewe, welcome to
Thank you for having me.
Thank you for joining us. Thank you. I'm going to ask that we dive straight in and begin with a bit about your background. Your experience, of course, bridges finance, insurance, healthcare investment. You're in the ideal position, really, to explore that intersection between finance, healthcare, access, and much needed reform, which we will talk about in a bit. So let's take a quick look at your profile.
Yeah.
You're founder and chief executive of AfyA Care Nigeria Limited.
Yes.
You describe it as a healthcare investment and service company focused on improving access to affordable and quality healthcare in sub-Saharan Africa. Independently, you are chairman of Evercare Hospital Lekki, a private tertiary healthcare facility here in Nigeria. It's a good time for me to mention that other tertiary healthcare institutions and facilities are available.
Yes, indeed.
Beyond Evercare. All right.
You would know.
So delving further back to your past, earlier in your career, you worked in banking.
Yes,
You came from a banking background. You held roles at Guaranteed Trust. Right. Before that, you spent many years in financial services through Guaranteed Trust Assurance, Mansard, AXA Mansard. You covered health, life, property insurance, asset management. Quite a broad portfolio. You're quite the man. And then you ended up as executive director of AXA Mansard. But you moved on from that in January 2020 to pursue other ambitions.
Yes,
which I'm sure will form the bulk of our conversation here.
Indeed.
So let me begin by asking you, starting with this journey, how did your background in banking and insurance evolve into healthcare investment and, of course, the founding of AfyA Care?
It's a very strange story, Tokunbo. Coming out of school, all I wanted to do was banking. And I started banking in January 1992 with the old Crédit Lyonnais Bank, the French bank. And I worked with them for 3.5 years before I joined GT Bank. Mm. And I spent 9 years at GT Bank. January 2004, I got a call from the CEO. And it was on a Friday and said, "Tosin, come up." So I thought, what does Tayo want? So I went to see Tayo at the real call. Yes. Amazing man, by the way. Mm. And he said, "Look, we bought this insurance company. We don't quite know what to do with it. And we would like to help to transform insurance industry." So I thought, Friday, Tayo, boys are waiting for drinks. What is this story about? And then he said, "We would like you to go and run it." I said, "Tayo, I don't know anything about insurance. Surely this is a joke. It's not April. This is January." He said, "Well, you don't really need to know. You can hire people who know, but you know all of the essential things that we did to transform banking through GT Bank. But if you put those same things in place, maybe you'll be able to do something." So it's okay. Let me go think about it. The following Monday, I came back and I said, "Tayo, I think I'm up for this challenge." But truly, I didn't know anything about insurance. I could barely insure my own car on an annual basis. I had an agent that used to come through and it was a bit of a problem. So one of the first few things we did was to call in a market research company And they said, look, ask the public about, insurance. Ask them whether they knew this company we had bought, which was called Heritage Assurance, Company Limited. They had never heard of it. It ranked number 97 out of 103 insurance companies in the country. Was really small. But one of the questions I asked them to ask the public was, if there is one insurance policy you'd like to buy, what is it? 80% said health insurance.
Mm.
And the company that we had bought didn't have a health insurance license. That stayed with me throughout my career in the insurance space. And I thought that I would get back there. Made a start. We invested in a top health insurance company. I think a year later, didn't quite work. Relationship didn't quite work well. So, we left with our investment. And it didn't take, it took me quite a while. In fact, I think it was October 2013 when we finally made that step into health insurance, and we started a new health insurance company. By this time, GT Bank had left, and the company was called Mansard. So we started a company called Mansard, Health, or Mansard HMO. Because in 2004, we had asked the public, and the public said they wanted health insurance. So even though we were growing the other business, we were growing the health, we were growing the life, we were growing the property and casualty, I always felt that we were not meeting the public's expectation. And the expectation was they wanted health insurance. So finally in 2013, we started one. I think that's the start of my my journey into healthcare space.
So presumably that insurance gap, I'm assuming, informed your further pivot. So I'll ask you, what was it you haven't left? You left Mansard in 2020, but what was that gap where you felt that AfyA was specifically created, destined to fill?
So when we were going to start the health insurance company in 2013, we engaged a few, consulting firms, here and there to do quite a bit of research for us into this healthcare space. What is it about? What is missing? What can we do? How is it done in other developing markets, And we saw a huge gap, in health insurance, the pooling of funds. 75% of Nigerians, maybe more at that time actually, were paying for healthcare out of pocket.
Hasn't changed.
Hasn't changed,
more now,
unfortunately. And also the quality of the healthcare they were receiving had also become quite suspect. I grew up in Ibadan, and my family grew up using, UCH or Jericho Nursing Home. And in the 70s and the 80s, these were amazing hospitals. UCH was an amazing place. In fact, I did not step into a private hospital until I came to serve in Lagos in 1990. So for me, what I saw from the research was that, there was a big gap, in quality of care as well as in just the availability of good care. And we decided then that we would actually not only build a health insurance business, but we would also intervene on the provider side. So we were going to build a hospital, in the company. A year later, we sold the company to AXA, so it became AXA Mansard. And we kept trying to raise capital, to build a hospital. We were going to build a 200-bed tertiary hospital in Lekki. So maybe no surprises, I ended up as chairman of Evercare. We were actually competing with Evercare, what became Evercare at that time. We got some investors. We got IFC in, we got African Capital Alliance, we got Propaco, the French DFI. Of course. But we had a 50-50 debt equity finance structure. So we raised all the equity and we couldn't find the debt. No Nigerian bank would lend to us. And eventually, that transaction sort of like went cold. And it went cold around the time that I thought I was going to leave AXA anyway. I had done 16 years. From the moment we sold the company to AXA, I sort of like giving myself 5 years. And I was going to leave and go to do private equity. But I didn't quite feel happy that I was leaving the healthcare space. The health insurance company we founded in 2013 had become the biggest in the country, become really dominant, very successful. And that was fulfilling somewhat. But I felt that we were still scratching the surface. And we were not yet, doing what it would take to shift the dial in terms of healthcare provision and in terms of health insurance in the country. So I decided to leave, and along with a few colleagues, and again, go on the road looking for capital. And, we found capital, we found investors, private equity firms, IFC, individuals, family offices, not too many of them. There's a challenge with Nigerians invested in healthcare, but we'll come to that. Well, we found a few people and we sort of started, AfyA Care. And as you said, and as you said earlier, the intention is to invest in healthcare in a way that will build, the right sort of skill, bring together, good medical skills and entrepreneurship and capital to bear upon this problem that is not going away. And we're all here. And as we get older, we start to see the problem a little bit more closely. And we believe that we found the formula. We did not invent the formula. We simply looked well around the world and saw what other people did. What did they do in India? When I was growing up in Ibadan, there were lots of Indian, doctors training as residents to be consultants at the UCH. There were, lots of Indian students, at the university, undergrad. And today it's completely different. Nigerians are going in droves, to India. What did they do? Apollo was set up in 1983. Today, we all know what it is. Over 70 hospitals, over 14,000 hospital beds, $2 billion in revenue. Massive turnaround. And they're not the only ones. There's Fortis, there's Manopal, there's Max Healthcare, there's Care Group. So what did they do? Why can't we do it? And this is the big bet for us here at AfyA Care. That actually, at AfyA Care, that actually, if we put our minds to it and we use, we don't try to reinvent the wheel, but adapt the formula to the Nigeria setting, maybe we can do the same thing.
Absolutely, Tosin. And I'm going to back up in a bit and talk about the problem. Okay, but before we do that, I just want to digress ever so slightly because I really can't resist. You mentioned Tayo Aderiokro.
Yes.
You set you off on this path. I bought this insurance company. Go run it. Can you give us some insight into what kind of mindset produces that kind of chain of events? What was he like to work with?
So I have to start with Fola and Tayo because they were like twins.
Of course.
These are two amazing men. I mean, young men who set up again, on the transformation journey and built, Guarantee Trust Bank. They saw possibilities, and they built the bank on the back of a lot of young people who were made to see possibilities and not limitations. They did a lot of training, a lot of capacity building. And I think you will see the results of all of that today. If you look around whether banking industry, you would find, GT Bank alumni everywhere.
Absolutely.
If you look around at other areas, other sectors, oil and gas, again, you would find them. And I think it's a testimony to these two gentlemen and the sort of quality they had as human beings and the sort of discipline they had and the approach they had towards business. They were brilliant. They were people who built other people. They were people who invested, poured their lives and poured themselves into other people. Fola and Tayo, very, very similar, both of them. So Tayo woke up and said, let's go and change, insurance industry. And the lots fell on me and, that's what happened.
That was it. Thank you. So I'm going to come back and define the problem and start to dip into AfyA care. But let's consider Nigeria, healthcare space. You've already alluded to much of this. Over $1 billion is hemorrhaged each year in medical tourism. Our per capita spend in healthcare is hovering between $70 and $80 per person.
$75.
$75. Been doing that for a very, very, very long time. The amount of proportion of our GDP that's spent on health is slightly embarrassing, to say the least. 70% of people in this country, we've already said, pay for healthcare out of pocket.
Yeah.
The National Health Insurance Scheme barely covers about 5% of the population. And this country has an average life expectancy of about 55.
Yes.
It's not rocket science. Why is it? So I'd like to talk to you about AfyA care. Leaning on that, tell me a bit about AfyA care's core mission and how it differs from the traditional healthcare provider or insurance company.
So I think if you look at the problems that you've, very eloquently, mentioned just now. First, the way we dimension the problems, we've sort of put the problems in 3 buckets. Or we sort of put maybe the solutions in 3 buckets. The first solution is health insurance. The current government, administration of President Bola Ahmed Tinubu, I think, has done a bit in the last 2 years. Number of people covered by health insurance has gone from maybe about 5 million to 10 million, to 20 million, from about 10 million to 20 million. So they've doubled.
Yeah, sure.
So we are now at about 9% from about 4.5%. And that's commendable. But health insurance is a starting point. Let's be very clear. The situation where you have people paying out of pocket across the entire country, poor people, middle income class, and everybody together, it's simply not sustainable. It's not practical.
And it's untenable.
It is. So I think this is the first thing. And this is what attracted us when we were starting in 2013. And as we started to do the research, beyond the survey we had done in 2004, we saw that this gap, really existed. And to be fair, all hands would really have to be on deck. Government policy, entrepreneurship, capital to come in to raise the dial. But others have done it. India, before Prime Minister Modi, probably had, a similar level of maybe just above us, maybe about 10%. I think today they are over 40%, of the population, insured, maybe even 50. I was in Bali early this year for a healthcare conference, and the healthcare, minister addressed us, and they said they're at 98%.
Yeah.
Now, these are countries like us, not in any way significantly different.
This is in the UK, it's not Denmark, it's not
no.
Germany.
So we're not going to the West. We never look to the West.
Absolutely.
At AfyA Care, we never look to the West. We look to the emerging market. And therefore, there is a well-worn path others have gone down. And we need to get started. The administration of President Muhammadu Buhari did excellently well by enacting the law in 2022, May 2022, National Health Insurance Authority Act, which actually makes health insurance mandatory for all Nigerians. And I think this is a very good starting point. The big question, of course, is how do we give bites to this? How do we execute this? So for us at AfyA Care, really, it's about, first of all, how do you get Nigerians, to buy health insurance? What is our role? How can we come in? What can we do to move that dial? We've been at it for, I think, 4 years. We set up this company. And we think that technology is going to be a big part of this. when you look at banking and you look at what the fintechs have been able to do over and above the traditional banks and bring in technology, we think that technology has a huge role to play in this. So again, at AfyA, we set up a technology company that's doing a few things. I'll talk about that maybe a little bit later. We think product innovation has to do a lot with this. As we speak, we're about to engage another marketing research company again, to talk to members of the public in 7 Nigerian cities, Lagos, Abuja, Port Harcourt, Owerri, Aba, Benin, and Kano, I think. Again, to try to, go into the minds of people. Why are you paying cash? Why are you not buying health insurance? Is it that you don't know about health insurance? Is it that you have trust issues towards health insurance? We need to ask these questions. We need to get over this point, because if we don't move health insurance to at least 50%, we cannot transform healthcare. It's just the point.
No.
So again, for us, we then have to look at the hospitals themselves and to say, look, what will it take to transform, the hospitals? Nigeria has, according to the National Healthcare Accounts, I think the latest one was 2017. We have about 43,000 hospitals and clinics. Beyond the large teaching hospitals, University of Maiduguri Teaching Hospital, University College Hospital in Ibadan, Luth, LASUTH, who all have, massive, infrastructure, 1,000 beds plus. Beyond those, the average size of the hospital in Nigeria is probably 10, 15 beds. Now, Tokunbo, having spent many years abroad and trained abroad yourself, that a 10, 15 bed is technically not a hospital.
No.
It's a doctor's office with beds attached to it.
Absolutely.
Should not exist. Yeah. But that is the dominant structure we have. That hospital it's impossible for it to provide care at the right standard. It's impossible. We cannot have all of the disciplines that are required to attend to the patients. Cannot have even nursing, at the right level, nursing care. Cannot have pharmacists at the right level, because simply the scale is too small, to afford to look after and pay the wages of the necessary skills.
And healthcare needs a much broader base.
It needs a much broader base. So what we saw was this highly fragmented system. At a conference in 2020, virtual, I had the CEO of Mediclinic, which is the largest hospital group in Africa, on the call, and I talked about Nigeria, and I said fragmented. I said, Tosin, that's not fragmentation. What you have in Nigeria is beyond fragmentation. When you have a majority of the facilities that are 100 beds, 150 beds, then you say it's fragmented. What you have is not fragmentation, it's beyond fragmentation. So for us at AfyA, we thought, let's come into this market. We're business people. As you know, my background is finance. For us, the thinking is, what can we do? So can we start to consolidate in this market and bring these hospitals together to form bigger and bigger organizations with the right quality, with the right standard to deliver care to the people, but also building the right sort of scale that can deliver economies of scale and therefore enable us to deliver this care and services at an even cheaper price. Simply because we have bigger bargaining power with the suppliers. Just basic economic stuff, 101 economics. And so this is our thinking at AfyA. So number one, we intervene again on the health insurance. We join the fray and we try to build what we built in our previous employment, maybe even quicker, leveraging technology, leveraging other things. But also from the provider side, can we start to show that you can bring these hospitals together to form stronger, larger organizations with higher quality of care, higher standards, self-regulatory, good corporate governance, good clinical governance, and it basically just tried to see to do what we've seen others do in other emerging markets. And the third leg of what we're trying to do is technology, because when you look at banking, the banking transformation, it was technology-led, of course, by people like Fuller, Tayo, Taylor Peterside, etc. When you look at insurance as well, when I went into the insurance space, the use of technology was very minimal. Today, the insurance industry has done amazing things. And again, using technology. If you get stopped, by a policeman, he doesn't need actually to check your insurance. He can punch your registration details on his phone, and he will know whether you have insurance or not. And that's technology. And so, again, we set up a technology company focused entirely on health, so what they call a health tech company. And we're building applications, to help us in our journey in the healthcare space. And not just us. So they're not just building technology for us, they're building technology for the entire market. Okay. So these are some of the things that we're doing, bringing business, bringing technology, running around the world looking for capital, to finance all of this, and hoping to make a change as we go along.
Absolutely, Tosin. And of course, much of what you said, I'm sure is validated in our mutual understanding that the existential problem that confronts healthcare in this country is funding.
Yes.
Money.
Critical.
we need that to underpin, everything else. So it's a good time for me to ask you to just talk to us a bit about AfyA Care's portfolio, partner hospitals. What are you building or transforming in this ecosystem? I'm sure that we do not want to be left with the impression that AfyA Care is basically an insurance company with a bolt-on service delivery company. You've described an integrated healthcare system.
Yes.
So talk to me about that.
Okay, so beyond our health insurance company, which is called Bastion, by the way, I think by the end of this year, they'll probably be number 4, number 5 in the market. We, in 2020, acquired the hospital, Arjolad Hospital. It was a 38-year-old hospital, founded and built by an amazing man, Dr. Oladipo.
Absolutely.
Absolutely amazing man with his wife. They built this thing from scratch to a mid-size. It was a 100-bed hospital. And we met, with Dr. Oladipo and shared with him our vision. And our vision happened to really resonate with him. It was his vision as well. Give good quality health care at affordable prices to people in the lower income class, and maybe some people in the middle income class as well. And so we joined together with him, and we set about bringing, a lot of structure, into the organization. At AfyA Care itself, we set up shared services. So we operate shared services. So things like, legal and compliance, HR, core finance, strategy, marketing. We run all of those things, from the head office. And that makes the work of the operating companies light. We have expanded from 100 beds in one location to 215 beds in 3 locations in Lagos. We have 3 other locations where we render only outpatient services. So clinics open in the morning, they close in the evening. So in total, we are in 6 locations across Lagos today. So it's been transformed. It's delivering care at a much higher level than it was before. It was always a favorite for young mothers. Arjolad has always had, many deliveries in the history. Yeah, very good history. I'm sure if you ask people, around you, you'll get a lot of people saying, yes, I was born there or I had my babies there. We're still delivering about 3 babies a day, in Arjolad. And this year, we're looking to expand out of Lagos for the first time. Maybe Port Harcourt will be the first place we'll go to.
Okay, so I'd like to delve a little bit further into the finance and economics of all of this. I mean, it must all be underpinned by sustainable business.
Yes.
No doubt about that. And there are those who would say that, healthcare really is a cost center. And less than 1% of global private equity funds flow into African healthcare, let alone, talk about Nigeria.
Yes.
So my question is, how do you go about convincing investors otherwise? The nuts and bolts of this problem and how you go about resolving it.
Tokunbo, it's very difficult. I have to confess, it's very, very difficult. At the beginning, I think when we started out, it was the COVID year. And I think COVID being around, sort of, when I look back now, I think it softened the ground for us a bit. People were more amenable to look at healthcare in the COVID year. So we raised a bit of money in our first 2-3 years. The real problem, Tokunbo, is the fact that in Nigeria, you cannot point to one healthcare company and say, this is the model. They're successful, they're profitable, they're paying dividends. First of all, most of the companies are tiny, as we said earlier. It's a fragmented business. I think there's only one hospital that's quoted on the stock exchange. If it's still on the stock exchange, I do not remember the last time they paid dividends, et cetera, et cetera.
Yeah, that's very historical matter.
Yes. But you can point to all the banks. The banks are paying dividends twice a year. Yeah. So as an investor, the dollar doesn't really care. It's not a sentimental currency.
Yeah, absolutely.
It's looking for where it's going to get returns.
Yeah, doesn't know social impact, doesn't know ESG.
It doesn't. I mean, the investors will tell you that those things are important to them, but let's be honest. So the only way is to show people that in other places, other similar places, they have done the transformation. Yeah. And this is the road map. And in those places today, the businesses are quoted. I think Apollo is quoted in India and in Luxembourg. Mediclinic is quoted in South Africa, and I think on the London Stock Exchange. So in other parts of the world, other parts of emerging markets, people have transformed from this notion of it's just a social service into, sustainable businesses. And we have to do the same thing here. And the earlier we do it, the better. Yeah. But I believe once we do it and we show Nigerians that, look, healthcare it can be a business and it can be a very profitable business, then I think we will see the investments. The question is, how long is it going to take us, to do this? And how many people are on that journey? Because the more organizations are on that journey, the higher the chances of success for 1 or 2 or 3 of them. And it's that success that will start to open the door for many investors. Of course, there are a few investors who would believe in us, as the people in AfyA care. They know what we've done, in the past. And they feel that, the story we've told them is a good story. They feel we know the roadmap. And therefore, they've invested in us to finance all of these things that I've talked about. But the journey ahead is still quite long. Yeah. And constantly, we need to put in a bit more money. This year, for example, for us at AfyA Care, we break even on an EBITDA basis. So we're very thankful. Good. It's taken, thank you very much. I think a couple of years longer than we expected, but, where
it's no mean feat. It's no easy task.
No, it's not.
Well done.
No, it's not. But that's also because, of course, our people have gotten better and better at what they do. The quality of care we give is a lot better. Patient experience is a lot higher. Net Promoter Score has gone from negative, 2 years ago to, I think, about 70 today at Arjolat, for example. But also because we've been able to leverage on all of this success to build bigger and bigger scale. And so we're seeing the scale effect. And the more we stay at it and we improve on this scale, we expand, then, it's only natural, to be honest, that the result will come out. If we do the things in a very disciplined manner that will bring out success, then we will get success.
Sure. Absolutely. And it is a fact that healthcare in Africa particularly requires, talking about investors, patient capital.
It does.
Pardon the pun.
It does. It does. It does. It does. Patient capital, patient short-term, medium-term financing. We have loans, with banks that have been extremely supportive. Sterling Bank is an amazing bank, that has really given us a lot of support. And we really cannot tell our story without talking about Abubakar Suleiman and Sterling Bank and his colleagues. Most Nigerian banks wait until you're successful. Then they come. And so we'd like to bank you.
Of course. Yes, the phrase, that typical phrase, we would like to bank you.
Yeah, we'd like to bank you after you're successful. Yes. They have taken a very big, gamble. According to their own ethos, they have this thing they call the heart of, sterling. And the very first letter in the acronym is healthcare. And they're living up to that. So we're really grateful, to this kind of organization. We're grateful to the investors. We have a couple of private equity investors who have invested in us, Karina Stone, Kuramo, amazing. IFC has always been a big investor in healthcare, and they're with us, and they invest not just capital, but also human capital.
Yes.
So they've helped us a lot with the transformation, with raising quality. So we're really grateful, to the investors, we have.
Yeah, no, absolutely. So, yeah, we would like to bank you. I wonder how many times you said that in your career in banking.
Many times. I confess, guilty as charged.
Okay, so you've just talked really about a mix. You've talked, we started out talking about patient, long-term capital. You've talked about the support you've had from Sterling Bank. But you've also talked very quickly there about DFIs, and you've talked about IFC and one or two others have gone in there. So my question here is, in your view, what's the right balance, that will support healthcare? The right balance between patient capital or private capital, government support, donor funding, and DFI support. Where is that sweet spot?
So from my experience, and this is not my first experience in raising capital, in 2011, when GT Bank had to exit the insurance business that we were building because central bank regulations had changed and banks were no longer allowed to invest, in non-banking businesses, we had to go around the world, and we raised capital from private equity and DFIs. And it was a very deliberate strategy at that time. The DFIs will bring maybe just a little bit of money, not as much money as the private equity firms, but they would bring patience. They would bring some structure. They would help a bit more with the corporate governance. And having them on your equity list also helps even with your sales efforts when you're chasing up on large institutional, customers, etc. But the private equity firms are excellent in the sense that they keep you on your toes.
Yes, of course.
When you have the guys, they're not exactly cracking the whip, but the whip is there.
Oh, well, we are Tosin, they're cracking the whip. There's no doubt about this. We're cracking the whip.
Well, the whip is there. You know that these guys, they themselves have collected money from other investors, and
of course. And there's quite often a lot of DFI money in private equity.
There is, especially in Africa.
Yes.
Actually, quite a lot of private equity fund in Africa is from DFIs.
That's right.
So they keep you on your toes. They ask business questions, and they do business analysis with you. They test your theories. They make you test your own assumptions. And therefore, you probably get better at your craft. You get better at the business. And, you grow a little bit quicker than you may have grown if you had only DFIs in the business. So for me, I think, honestly, that balance is extremely good. If you throw in some family offices in there, not bad, even though family offices, my experience, tend not to invest a lot, in private ventures in Nigeria. And then the issue comes with short-term funding and banks. And I think that in healthcare, you have to limit bank loans. and especially at any time when interest rates are above 15%.
And what are we talking about in this country? With 25 thereabouts, but BOI would give you
BOI
about
is excellent. Excellent. I'm so sorry. I forgot to mention BOI. BOI has been supportive. Thank you for bringing that up. If they watch this interview, they're happy with me. BOI has been excellent. They've been supportive of our business, and we're very grateful to them. And they help us to dilute our cost of funding because, they give us money 10, 9, 10, 11%, I think some 15% now. But pure commercial loans today, they range from 33% to 35%. You're going to die. You're going to die.
It's not sustainable.
It's not sustainable.
It's not compatible with any business in my view.
No, because the rule of the thumb is that if your EBITDA margin is less than your cost of borrowing, then you're destroying value.
Of course.
But you sometimes don't have a choice because you also need to expand and grow scale quickly. So you take the gamble and you go for the commercial, facility, but you need to raise capital as quickly as possible and pay it down. My own thoughts today are that commercial loans a hospital should avoid taking commercial loans for anything longer than I would say maybe 9 months. Because you're just going to end up destroying the value. So you need to raise equity and you need to raise concessionary funding from DFIs and then stay away from commercial loans if you can.
Absolutely.
For the medium to long term.
Yeah. So that leads me on. And then we've started talking about the question of affordability, structure, systemic issues with Nigerian healthcare. In your view, what are the biggest structural constraints that keep Nigeria's healthcare from developing and scaling effectively?
So I think I started that with my earlier submission on. I think there are two things. The health insurance, I think, is primary. If we can get health insurance penetration up to 50%. That will free up some financing, for the providers. But I think the providers need to restructure. This fragmented system cannot scale. Every doctor wants to be managing director, chief executive officer, chief medical director of their 10-bed, 15-bed hospital. It doesn't work.
And they want to see patients too.
It doesn't work. So we need to build consolidated entities, stronger, larger, that can benefit from economies of scale and wring out some positive EBITDA figures from the scale of operations, because it's that profitability that will become enticing to the investors and to the lenders.
Sure.
So you need scale to deliver some level of profitability. 10% EBITDA margin, 15% EBITDA margin is a good starting point.
Absolutely.
Once you have that, then the bankers can sit with you. The investors can sit with you and say, we project we can lend safely to you and you return our money in 3 years. The investors can come and invest and say, we project we can invest in you and in 5 years we will go out at 2x or at 3x. So the starting point is for these hospitals to come together. I've attended quite a few, conferences, and people like to invite me to come and speak on healthcare finance. I preach the same message all the time. And I tell them, you don't need to join AfyA Care. So I say, this is not a pitch for you to join AfyA Care. You can form yourselves together, but the only way you're going to really develop, long-lasting institutions is by building bigger organizations.
Federation.
Yeah. We use whatever model suits you, but they've got to be big. Think about Nigeria. Think about Nigeria having 43,000 community banks, no single merchant bank, no single commercial bank. So no GT Bank, no UBA, no Zenith, no First Bank. What would be this landscape, what would it look like?
Absolutely.
Mayhem.
Yeah, absolutely.
Absolute mayhem.
Yeah.
When I started banking in 1992, there were 120 banks.
Yeah.
And it was mayhem. It was disastrous.
Yeah.
People were gaming the system. The regulatory, bodies could not keep up with the games, of the players. It was all about round tripping ethics, etc., etc. Quality wasn't good. They could not finance anything reasonable. Today, Mr. Soludo brought everything down.
Of course. Consolidation.
To 24, 25 banks through consolidation. And the changes were immediate.
Absolutely.
Capacity, durability of the organizations, quality of service, innovation, everything went up. Everything. Ability to finance, large structures like Dangote Cement, Obajana, Ibeshe, Nigerian banks were present, with the finance. And those are country-changing, transactions.
Absolutely.
Nation-changing, nation-transforming transactions.
Speaks to infrastructure.
It speaks to infrastructure, the kind of infrastructure the government can never do. I don't know how much of Nigerian bank loans were in Dangote Refinery, for example, but that's another nation, maybe continent transforming investment. So for us to get something similar in healthcare, we have to build 4-5 large institutions. Each one of them 5,000 beds, 10,000 beds, 20 hospitals across the country, 30 hospitals across the country, all connected with technologies, high standards. They have internal control, they have internal audit, they have clinical control, and all of those functions that actually make the standards of a hospital high. It's the same Nigerian doctors who are here who go abroad. The difference is that they're going into systems there where those control functions are there because the hospitals are large. They can afford to pay this group of people who are just looking after standards and quality.
Yeah.
When you're 15 bed, you can hardly even afford to pay the doctors that are seeing patients. Not talk of affording to pay doctors or affording to pay people who are going to do all these extra functions.
The economies of scale are not there.
Economies of scale are not there. Economies of scale are not there. You're going to be buying medicine from people who are bought, from people who are bought, from people who are brought. When you have economies of scale, you walk into FitSyn and you say, dear Dr. Ayebe, please, would like to order medicine for the next 1 year. And, you cut your deal straight with the manufacturer.
Exactly.
And it's a rock bottom price. And therefore, you can pass on some of the savings to the patients. And then you can pass on some of the savings to your investors.
Yeah.
And the business becomes sustainable.
Absolutely. I think we're at a perfect point in this conversation to talk about, of course, you are at the intersection of finance, leadership, social impact. We've talked about all of those things in this conversation. So I'm going to ask you a pointed question, especially coming from a background in finance. How do you reconcile profit with the essential purpose of your endeavor, which is to deliver high quality care?
Honestly, I think it's a lot simpler than people think. And they are totally interrelated. Impact for me is making good health care available to people who ordinarily wouldn't have it. The options they would have would be very limiting, and the quality of care they would get would be very restricted. In the AfyA care model, we are delivering very good care to people at bottom prices. One of our investors was asking us this question one day, and we converted our rates to dollars, for them to see. People are seeing doctors and they're paying $3, they're paying $5 to see consultants. You know how much people charge in the rest of the world just to see doctors, to get a bed overnight, in our Jolad standard is, is less than $10. So we know that we're bringing that care to people, but we also know that we cannot deliver that profit unless we do that much more, unless we actually expand that scale much more. Our focus is not the 1% of 1%. We're not interested in that market at all. We're interested in the lower income and the lower middle income at our Jolad. We're building a second hospital company that is entirely focused on the middle income class. That's the Oakwood Medical Center. We'll open next year. Fingers crossed.
It is wood. It's magnitude.
So for us, it's important that we are able to deliver that care and to save lives and to do it at affordable prices. And for as long as we do that and we do that at the right scale, our formula says we will make money and we will deliver profit. Because we know if we don't deliver profit, our business is not sustainable. We're going to die. So we have to deliver profit, but the route to doing that is to make this service more affordable and more accessible to people.
Sure.
The bigger that is, the more profit we'll generate.
Of course. So of course you are focused on democratizing healthcare. The answer, from what you've told me, therefore, to that, delivering that affordability is scale.
Is scale.
And you are growing, expanding.
Yes.
Okay, perhaps not quite at the scale
that we want. It's limited by capital.
Absolutely. Yet you are now this year
EBITDA
positive. And logically, that is saying to me that your strategy is beginning to deliver benefits.
Yes.
My question is, what's that doing to quality? If you haven't quite reached that level of scale, prices are down, you are EBITDA positive.
Yes.
The one thing we do have to be concerned about is quality. What would you say?
Interestingly for us, the quality is going up every year. So let me tell you how we're structured. So on the clinical side, first we have a board governance committee that is chaired by one of the, I would say, revered physicians in this town, returnee of many years ago, and has been CMD in a very big, private hospital, has been managing director in a very big private hospital. He's a surgeon. I'm sure I've given you all the views, you know who this is.
Yeah.
And he is very particular about quality and about standards. He, I think, was the first person to get a JCI accreditation for his hospital. So he has all the standards. He is a member of the Society for Quality, SQN or something.
You've named him in
In many ways.
Yeah.
Dr. Jim Cook is an amazing person. He chairs that board.
Yeah.
And on that board also we have, a nurse with a PhD in nursing, who works with one of the large, oil companies, again, in a facility that has, accreditation. And then, of course, we have our own team. Working with us is IFC, who we have subscribed to this global index survey that they run every 2 years. So every 2 years, they have, I think, 150, 250 hospitals across the world, mostly in emerging markets, but also some of them in Europe. And they have, some metrics that they measure, and they measure everyone. And you'll see where you are in this measure, in this particular metrics. You see where you are. We know where we were, the first time we did it. We know where we were the second time we did it. We just got the report for last year, and there is improvement.
Where are you?
Let's just say that I would say that we're probably about the 50th percentile today.
Right.
And we started from maybe lower than 75th percentile.
Right.
In some measures, we're in the 25th percentile. But on a general basis, I would say that we're now 50th percentile. moving upward all the time.
Does that give you some idea which services also need, but which services are perhaps on the 10th?
It does, because every time we review the report, we see where we're down.
Sure.
And then we work on it.
Sure.
And then it's better.
Correct. Yeah.
We work on it and then it's better.
That's the point,
we do root cause analysis. Wow, we have a number of theaters delivering excellent metrics on surgical infection, surgical site infection rate. And then we have this particular theater and the rates are not so good. So we go, we check what's going on. Where's the CSSD? What does the CSSD look like? What's the process flow? Is there a dirty corridor? Is there a clean corridor? And you do the analysis, you unearth the problem, you fix the problem, and then the result, shows. So for us, Tokunbo, I promise you, quality is the one thing that I'm after in this business.
Yes.
I think if we wanted to make money, I would have gone back to banking.
Many other industries.
Yeah. My wife's cousin says to me, Tosin, you could have done anything. Why did you go into this healthcare business? I could have done oil and gas. I ran oil and gas in GT Bank for 2 years, so I'm quite familiar with that. But quality is the one thing that we will do. But to do that quality on a sustainable basis, you have to make profit. So there must be a balance.
Sure.
And we've seen the model elsewhere.
Yeah.
So why can't we do it?
Absolutely. So tell me, therefore, what your outlook for healthcare investment in Africa is over the next 10 years. How do you see it panning out?
Let me start with Nigeria. Because Africa is not really the same. South Africa is advanced.
So you say sub-Saharan?
Yeah, so sub-Saharan Africa. Let me start with Nigeria. I think in 10, 15 years, we will have maybe 3 to 5 large corporates owning dozens of hospitals across the country, having that scale, but also having the structure on the clinical side and having the structure on the non-clinical side, and those structures will be operating at standards that are comparable with the rest of the world. And health insurance would underpin all of this. And we will be at that 50%, health insurance, penetration rate. And we would have a lot of Nigerian doctors who would follow the path you have gone, from diaspora, come back to come and help raise the standard of care, to come and raise the standard of teaching and developing new doctors. And we would have technology. A lot of the technology may not necessarily be from the West, it may be from China, but we would have technology because of affordability. Today, open heart surgeries is probably the exclusive preserve of the 1% of 1%, putting in stents and so on, because obviously the price is high. At that time, I think, for $2,000, people will be, putting in stents, and doing all sorts of procedures, and therefore it will be democratized. And with health insurance, I think things will be a lot better.
Tosin Runsewe, thank you for joining us on
Thank you.
One2One.
Thank you.
Thank you.
Thank you.
Pleasure.